Hello everyone, Jerry D'Ambrosio here, filling in for Dr. David Paul. Hope everybody's doing well. It is about noon here, close to it, 11:30 here on the East Coast, Wednesday afternoon, shortened week this week with Independence Day here in the States on Monday. But it is the middle of the week, so we just want to do a quick little market recap here, give us all an idea of the state of the situation that we kind of find ourselves in here in the US and in the UK. So we'll start in the US program. We can see that all the major indices here are down. It's been an up and down day. We've seen a few of these types of days over the last 3 or 4. But as it stands right now, all the major indices are in the red. We have a red light in the price column of the color guard. So the VectorVest Composite lower day over day and week over week. And it looks like relative timing lower on a week over week basis. However, unchanged from yesterday. And you can see RT just barely lower week over week. Buy to sell ratio unchanged on not only a day over day basis, but a week over week basis. Right at that 0.11 level. We can see 4,067 buys, 443 sells. So tremendous overall weakness right now. We're in that oversold environment where the BSR is below 0.2 and the MTI is right at about 0.6. So we do hope for a rally or wait for an explosive rally before we start buying stocks again, or at least going bottom fishing. But right now it stands, we do not advocate buying any stocks, and we're going to play the market to the downside. So if you are a little bit more of an aggressive swing trader, we're playing the market to the downside with the primary trend down, the underlying trend down, red light, and the price column of the color guard. So let me move into a market timing graph here just to kind of give us a different perspective. You can see as of the hard right edge, we are right below this 53.46 resistance zone. So this red line that I have on the chart is basically the bottom of that zone. You can see it just lands right there at the bottom. So if we just look over, we can see that the VVC is currently below that 53.46 resistance zone. The encouraging thing over the last couple of days was the fact that the market had rallied all 3 days here, Thursday of last week, Friday of last week, Tuesday of this week, off of the lows of the session. So some nice intraday reversals, intraday rallies, causing the markets, the VVC, to close well off of the lows. So that was somewhat encouraging. It does look like with today's market action that we are going to at least temporarily come back to retest those lows. But boy, are we moving sideways here over the last 4 or 5 days, right? Even going back to Wednesday of last week. We're really just moving sideways here with a little bit of a drift lower. But we're right in that resistance zone. So we're clear retracement off of 53.46 might lead us to retest the June 16th low. So if you are playing the market to the downside, you have some potential, some gain potential there to the June 16th swing low. If you're thinking, all right, what do I need to see before I start going long again or start buying stocks again? Well, you'd really need to see a breakout above this 53.46 resistance zone, right? So as a trader, if you're at resistance, you're in a wait and see mode. Does price break above resistance? Okay, if that happens, I'll be bullish. Or if it does retrace off of resistance, down off of resistance, I'll be bearish. But you got to be careful when it's at support or at resistance. You really want to wait to see what the market or how the market reacts to that zone. If we are an investor, I don't think we're looking to buy stocks just yet. Even on a resistance breakout to the upside. An investor is going to wait for the confirmed market call, right? Or at least a DEW up signal before starting to buy stocks again. And we have a ways away from that happening with the buy to sell ratio at 0.11. Remember, it has to go above 1 before the confirmed up call can come. So if you're an investor, a longer term investor that is not really messing around with these types of short term rallies and rips and looking for a sustainable trend, you're going to wait for a confirmed up call to start buying stocks again. So you're keeping your powder dry. If you're aggressive, you're really looking for which way the market moves here over the next couple of days, either a breakdown below support or a breakout above resistance, and that will determine your directional bias. Okay, so that's the US market. Let's take a look at the UK market. We're on the home page here as of the close of the 5th of July. You can see the FTSE 100 did fall quite a bit, almost 3% here. VVC/UK, almost $4 a share, almost 1% lower than the close of the previous day. Now, we couldn't have gotten a red light today because 5 days ago was green, even though the VVC fell on a day-over-day and week-over-week basis. Remember, it was green 5 days ago, so we can't get a green light, or a red light, excuse me, in today's price column, but the RT and the buy-to-sell ratio indicators both turned red because they're both lower day-over-day and week-over-week, and there's both below the value of 1. MTI also lower day-over-day and week-over-week. The underlying trend is still down. Short-term trend is still down. We're still in a confirmed down situation. So as a trader, you may be playing the market to the downside or not doing anything at all. As an investor, you're definitely not buying stocks yet. It's very clear at the top that we don't advocate buying any stocks at this time. So looking at a market timing graph, VVC is still well below its 65-day simple moving average. MTI below 1, buy-to-sell ratio below 1, RT below 1. So all three of our market timing indicators there are unfavorable. If I zoom in, just take off those indicators, we are approaching support. If I add parameter, go to technical analysis, support and resistance. You can see the support line is right at the bottom, right at the June 17th low. So it looks like we almost got in that zone today, again as of the 5th of July. So also a wait and see mode right now with the UK market. A breakdown below this support level. I can't even see where the next support level is. Looks like it might be up there's the current support level. Maybe in this area here. That looks to be support right in this area here. So $3.99, about $400, about another 5% drop potentially down to the next support level again at about 400. So what we're looking to as a trader, look, any retracement off of the support zone might give us an opportunity to go long again. If we're fortunate enough to break above this resistance zone, that'll be bullish as well, with 461 as the next resistance zone that we have to keep an eye on. And if we read the views here, it says the FTSE 100 closed sharply lower today as falling commodity prices weighed on mining stocks. With two red lights and a down situation, again, just reiterating what I was saying, prudent investors should not buy. If you're aggressive, play the market with a bias to the downside because the primary wave is still down. And if we move over to the U.S., I'll go into the views as of the close of yesterday, and it says U.S. stock markets ended the day mixed as gains in the technology sector outweighed inflation fears. With three yellow lights and a down situation, prudent investors should not buy stocks at this time, and aggressive investors and traders should play the market as it develops. So again, we're waiting for that short-term trend really to gain momentum in one direction or the other. Looking at that 6-month chart of the VVC, just kind of moving sideways here, I would look for a breakdown below the recent lows as a starting point to add short positions to the portfolio, or a breakout above resistance to add long ones. Well, folks, thank you for joining me. Don't forget to tune in next week for another market recap. Have a great day, everybody.